Transparency and truth are our core values. Powered by human research and AI insights, we deliver unmatched value. Stay tuned.
For info only, not financial advice.
Welcome back to the Deep Dive. You're with ChannelVest. This is your analysis. Get ready to explore the sizzling world of hot stocks under $10. Buckle up because we're diving into a research report fresh off the press dated February 17, 2025 that we put together just for you.
10 companies across diverse sectors. We're talking about companies with massive growth potential trading at a bargain price.
Okay.
We've got healthcare, tech, mining, even a touch of entertainment.
Okay, let's unpack this. First up, we have Adapt Health, ticker symbol HCO. They're riding the wave of home healthcare solutions, and let me tell you, their performance has been eye-popping. You're with ChannelVest. This is your analysis.
Over the past year, Adapt Health has seen a 37.8% return. That's impressive growth.
This is insane. What's driving this incredible performance?
It's all about demographics and changing needs. As the population ages, the demand for home healthcare solutions is skyrocketing. People want more convenient and affordable options, and Adapt Health is perfectly positioned to deliver. They offer everything from sleep therapy equipment to diabetes management tools, all from the comfort of home.
So they're tapping into a powerful trend. But what about their financials? Are they actually worth investing in?
Their fair value estimate is $15.25. That's significantly higher than their current trading price of $9.66.
Hold on, you're saying there's a huge potential upside here. You won't believe it.
Absolutely. But remember, every investment comes with risks. Changes in healthcare regulations, increased competition, or even a broader economic downturn could impact Adapt Health's growth.
Okay, so there's potential, but it's not a guaranteed slam dunk. Stick around, we're just getting warmed up. You're with ChannelVest. That's your analysis. Moving on to a household name, ADT Inc., ticker symbol ADT. Everyone knows their security systems, but did you know they've partnered with Google Nest?
Yes, and that's a brilliant strategic move. This partnership allows ADT to seamlessly integrate their security systems with Google's smart home ecosystem. It's no longer just about alarms, it's about creating a connected home experience that offers both security and convenience.
So ADT is stepping into the future of home security. But what about their financials? Are they still a solid investment?
Well, they're currently trading at $7.54 with a fair value estimate of $9.85. Plus, they offer a 2.1% dividend yield. That means for every $100 invested, you'd receive $2.10 annually just for holding the stock.
You won't believe it. That, combined with their growth potential and brand recognition, makes ADT a compelling option.
But what about the rise of DIY security systems? Could that threaten ADT's dominance?
It's a valid concern. The DIY market is growing, and ADT needs to stay ahead of the curve to remain competitive. However, their brand recognition and their move into the smart home space through the Google partnership give them a significant advantage. Okay, so ADT is a classic brand making smart moves to stay relevant. You're what ChannelVest is your analysis. Shifting gears to the tech world, we have Olo Inc., ticker symbol OLO, a company revolutionizing the restaurant industry. Have you heard of them?
They're the engine behind seamless online ordering and delivery for tons of restaurants.
Right. They're all about streamlining the digital experience for both restaurants and customers. But are they a good investment?
They boast a 35.9% one-year return. They're currently trading at $7.27 with a fair value estimate of $8.96.
Impressive. What's fueling this success?
The digital transformation of the restaurant industry. More and more people are ordering food online, and Olo provides the platform restaurants need to thrive in this environment. Their technology streamlines everything from order placement to delivery integration, making it easier for restaurants to manage their online business.
So they're capitalizing on a major trend, and their financials look strong. But what about competition? Isn't this a crowded space?
It is, but Olo has established itself as a leader with a robust platform and a loyal customer base. Plus, they have a debt-free balance sheet, which speaks volumes about their financial stability.
Okay, so they're in a good spot. You're with ChannelVest. This is your analysis. Next up, we have a global mining giant that you might not know by name, but you've definitely used their products. Get ready for Vale SA, ticker symbol VALE.
Vale is the world's largest producer of iron ore, a key ingredient in steel production. They also produce nickel and copper, essential metals for various industries. So think bridges, buildings, cars. Vale's materials are everywhere.
Wow, so they're a major player in the global economy. But what about the environmental impact of mining? That's a big concern these days.
Vail is acutely aware of the need for sustainable mining practices. They're investing in renewable energy sources, reducing their carbon footprint, and implementing responsible mining techniques to minimize their environmental impact.
So they're trying to balance profitability with responsibility. But let's talk about their stock. Is it a good investment?
Vail's stock is currently trading at a significant discount to its fair value. Analyst price targets average $13.89, while the current price is much lower. Plus, their dividend yield is an astounding 9.58%.
Hold on, 9.58%. You won't believe it. That's huge.
Yeah.
But mining is a cyclical industry, right?
Yeah.
What are the risks investors should consider?
Fluctuations in commodity prices, global economic conditions, and even geopolitical events can impact Vail's performance. It's a volatile sector, but for investors with a long-term perspective and a tolerance for risk, Vail offers a compelling combination of income and growth potential.
This is insane. We've already covered 4 incredible companies, and we're just getting started. You're with ChannelVest This. This is your analysis. Welcome back to the Deep Dive. You're with ChannelVest. This is your analysis. Let's continue our exploration of these hot stocks under $10. Get ready for some more incredible insights.
We've got 6 more companies to cover, each with its own unique story and growth potential.
I'm all ears. Let's dive right in. You're with ChannelVest. This is your analysis. Next up, we're heading into the energy sector with Tetra Technologies, Inc., ticker symbol TTI. They're a key player in the oil and gas services industry, and you know what that means.
It means they're riding the wave of a recovering energy market.
This is insane. Tell me more.
Tetra Technologies provides solutions for well completion and water management, crucial services for oil and gas producers. As demand for energy rebounds and oil prices rise, companies like Tetra Technologies stand to benefit.
So they're a bit of a bet on the future of traditional energy raya. But isn't the world shifting towards renewable sources?
It's true that the energy landscape is changing, but traditional energy sources will continue to play a significant role for years to come. Plus, Tetra Technologies is actively exploring opportunities in renewable energy, positioning themselves for the future.
Okay, so they're not just stuck in the past. They're adapting to the changing times. But what about their stock? Are there signs that this company is truly on the upswing?
Their recent price movement is quite telling. They've broken out of a bullish inverse head and shoulders pattern and are trading above their 200-day moving average.
Hold on. You're speaking my language. Those are strong technical indicators, suggesting that investors are starting to see value in Tetra Technologies.
Exactly. These technical signals, combined with the recovering oil and gas market, make Tetra Technologies a company worth watching.
You're with ChannelVest.
Yeah.
This is your analysis. Okay, energy is exciting, but let's jump into the world of cutting-edge medicine with Compugen Ltd., ticker symbol CGEN. This biotech company is developing revolutionary cancer and immune-related therapies.
They're focused on developing antibody-based drugs, a hot area in cancer treatment research. These drugs are designed to target and destroy cancer cells while leaving healthy cells unharmed.
Wow, that sounds like the future of medicine. Are they making any breakthroughs?
Their stock has recently broken out of a bull flag pattern, suggesting that investors are optimistic about their progress. Plus, they've reclaimed their 20-week and 50-week moving averages, further strengthening the bullish signal.
You won't believe it. This is insane. So for those comfortable with the risks inherent in biotech, Compugen could be an intriguing play. But what are those risks?
Biotech is a high-risk, high-reward sector. Drug development is a long, complex, and expensive process. There's no guarantee that Compugen's therapies will be successful.
Okay, so it's a gamble, but the potential rewards could be huge. Stick around. We're just getting to the good stuff. You're with ChannelVest. This in your analysis. Now, let's venture into the wild world of cryptocurrency with BTCS Inc., ticker symbol BTCS. This company operates in the blockchain technology sector, and let me tell you, it's a wild ride.
Blockchain technology is transforming various industries, from finance to supply chain management. BTCS is at the forefront of this revolution, focusing on cryptocurrency mining and infrastructure development.
So they're essentially betting on the future of digital currencies.
Yeah.
But crypto is notoriously volatile. How can investors navigate this risky landscape?
Cryptocurrency investments should only be made with a high-risk tolerance. It's important to diversify your portfolio and not invest more than you can afford to lose.
Okay, so proceed with caution in the crypto world. Got it. But what about BTCS specifically? Is there anything about this company that makes it stand out from the crowd?
BTCS has formed a bull flag pattern, which, as we've seen before, suggests potential for another sharp rally. This pattern, combined with the growing adoption of blockchain technology, makes BTCS a company with significant upside potential.
You won't believe it. This is insane. A bull flag in the crypto world. That's a bold prediction. But remember, folks, you're with ChannelVest. This is your analysis. We're here to give you the insights you need to make informed investment decisions. Now let's shift gears back to the world of biotech, with another company focused on developing life-saving cancer treatments.
Compass Therapeutics, Inc., ticker symbol CMPX, is developing antibody-based cancer treatments that target specific cancer cells.
That sounds promising, but we've already talked about Compugen, which is doing something similar. What makes Compass Therapeutics different?
Compass Therapeutics is focused on developing therapies for a wider range of cancers. Their approach is highly targeted and aims to minimize side effects while maximizing effectiveness.
So they're all about precision medicine tailoring treatments to individual patients. That's incredible. But what are the signs that this company is on the path to success?
Well, their stock has recently broken out of a bullish inverse head and shoulders bottom pattern, signaling a potential turnaround.
Hold on, an inverse head and shoulders bottom. You're speaking my language. That's a powerful bullish signal, suggesting that investor sentiment is shifting in Compass Therapeutics' favor. You're with ChannelVest. This is your analysis. All right, we've covered some serious topics today, from energy to biotech to the volatile world of cryptocurrency. But now it's time for something a bit more fun.
Let's talk about Topgolf Callaway Brands Corp., ticker symbol MODG. They own Topgolf, those high-tech driving ranges that are taking over the world.
Yes, Topgolf is a blast. It's like a video game and a driving range all rolled into one. But they're more than just entertainment, right?
Right. They also own Callaway Golf, a leading golf equipment brand. This dual ownership positions them to benefit from the potential growth of the sport, especially with the emergence of the new Tomorrow Golf League, or TGL, spearheaded by Tiger Woods and Rory McIlroy.
Wait, Tiger Woods and Rory McIlroy? You won't believe it. That's huge. How does this new league benefit Topgolf Callaway Brands?
The TGL aims to make golf more exciting and accessible to a wider audience. It features a team format, shorter matches, and a high-tech, stadium-like setting.
Okay, so it's like golf meets esports. I can see the appeal. But how does this translate into profits for Topgolf Callaway Brands?
The TGL could spark renewed interest in golf, leading to increased equipment sales for Callaway Golf and greater traffic to Topgolf venues.
So they're tapping into the star power of Tiger and Rory to drive growth.
Yeah.
That's a smart move. But isn't the golf industry struggling? Are people really that interested in watching golf?
The golf industry has faced challenges, but the TGL is generating a lot of buzz. If it's successful in attracting a younger, more diverse audience, it could be a game changer for companies like Topgolf Callaway Brands.
This is insane. We've covered 9 incredible companies so far, and we've got one more to go. You're with ChannelVest. This is your analysis. Stay tuned for our final deep dive into a company that's riding the silicon carbide wave.
Wolfspeed, Inc., ticker symbol WOLF, is a leader in silicon carbide technology, a crucial component in electric vehicles, renewable energy systems, and other high-tech applications.
Okay, silicon carbide. I'm intrigued. Tell me more.
Silicon carbide is a semiconductor material that's more efficient and durable than traditional silicon. It's essential for the development of next-generation technologies, particularly in the electric vehicle market.
So Wolfspeed is at the forefront of a technological revolution. Sounds like a great investment opportunity. But their stock has taken a hit over the past year, right?
Their stock is currently trading at a significant discount to its fair value. This decline presents a potential value opportunity for patient investors who believe in the long-term growth of the silicon carbide market.
You won't believe it. This is insane. A company with cutting-edge technology trading at a bargain price. Sign me up. But what are the risks?
The semiconductor industry is notoriously cyclical, with periods of boom and bust.
So there's a chance that Wolfspeed stock could remain depressed for a while.
It's possible, but for long-term investors, the potential rewards outweigh the risks. Wolfspeed is a leader in a rapidly growing market with a bright future.
You're with ChannelVest. This is your analysis. We've explored 10 incredible companies, each with its own unique story and growth potential. Stick around. Welcome back to the deep dive. You're with ChannelVest. This is your analysis. We've explored 10 hot stocks under $10 each with its own unique story. Now it's time to bring it all together.
We've covered a lot of ground, from healthcare to tech to mining to entertainment, and we can't forget the wild world of cryptocurrency.
This is insane. So many opportunities, so little time. But before we jump into our final takeaways, I want to remind everyone that you're with ChannelVest. This is your analysis. We're here to give you the insights you need to make informed investment decisions. But remember, we are not financial advisors.
Right, this is for informational purposes only. Always do your own research and consult with a qualified professional before making any investment decisions.
Okay, now that we've got that out of the way, let's talk about what we've learned. We've seen companies riding major trends like the rise of home healthcare, the digital transformation of the restaurant industry, the growing demand for sustainable mining practices, and the increasing adoption of blockchain technology.
We've also seen companies tapping into the power of innovation, whether it's developing cutting-edge cancer treatments, partnering with tech giants to create a smarter home, or revolutionizing the golf experience with high-tech entertainment.
You won't believe it. It's amazing to see how these companies are shaping the future. But I think the biggest takeaway for me is that there are opportunities everywhere, even in the often overlooked world of stocks under $10.
Absolutely. Penny stocks can be incredibly volatile, but they can also offer significant growth potential for those who are willing to do their homework and take calculated risks.
Okay, so let's break down those risks. What are the things investors need to be aware of when considering penny stocks?
Penny stocks are often associated with smaller, less established companies. They may have limited financial resources, making them more vulnerable to economic downturns. They can also be illiquid, meaning it might be difficult to buy or sell shares quickly.
So you could get stuck with a stock that's losing value and not be able to sell it easily.
That's a possibility, and because penny stocks are often lightly traded, they can be more susceptible to price manipulation.
Okay, so it's important to be extra cautious in this space.
Yeah.
But let's talk about how investors can mitigate those risks. What are the steps they can take to protect themselves?
First and foremost, diversification is key. Don't put all your eggs in one basket, especially when it comes to penny stocks. Instead, allocate a small portion of your overall investment capital to this asset class.
So dip your toes in the water before diving headfirst.
Exactly. Next, do your research. Thoroughly investigate each company, their financials, their management team, and their industry outlook.
Don't just rely on hype or social media chatter. Dig deeper.
Right. Look for companies with strong fundamentals, a clear business plan, and a track record of growth.
And don't forget to consider the regulatory environment.
That's crucial, especially in sectors like cryptocurrency where regulations are constantly evolving.
You're with Channel Vest. This is your analysis. So we've covered the risks, the rewards, and the steps investors can take to protect themselves.
Yeah.
But what's the one piece of advice you would leave our listeners with?
Invest with your head, not your emotions. Don't get caught up in the hype. Instead, make informed decisions based on solid research and a clear understanding of your own risk tolerance.
Wise words to end on. This deep dive has been a whirlwind of information and insights. We've explored 10 hot stocks under $10, uncovering the key trends driving their growth and navigating the risks associated with this investment strategy. But remember, this is just the beginning. The full research report is available for you to explore further. Dive into the details, do your own due diligence, and invest wisely. You're with Channel Vest. This is your analysis. Don't forget to hit that subscribe button and leave a comment below.
Thanks for joining us on the deep dive. Until next time, happy investing.
See you next time.